You know that feeling? It's late, you're on your phone, just kind of scrolling through your accounts, and you feel this disconnect. The news is screaming one thing, but the numbers right there in front of you, they're telling a totally different story. That little gap between the story and the reality, it's a space most people just ignore. And on Fair Insight, where we usually talk about how money really works, well, this part, it's the only place that actually matters.
And that brings us right to the central puzzle. We're in early 2026, and by all accounts, this is supposed to be crypto's victory lap. So why does it feel like you're just treading water, like your portfolio's completely stuck? What is really going on behind all those headlines? Let's get into it.
On one side, you've got the headlines, and man, they look good. You've got a crypto president, you've got these landmark pro-crypto laws getting passed. The US government is even creating a strategic Bitcoin reserve. It's this perfect storm of good news. But then, you look at the reality. Traditional stocks are absolutely smashing records, while crypto sentiment is down in the dumps at extreme fear. And your own digital wallet, it's just sitting there, consolidating. This contradiction, this isn't just noise. It's the key to the whole thing.
To really get this paradox, first we have to appreciate the sheer force of the political wind at crypto's back. And this wasn't just talk. This was a legit tidal wave of policy. All of it was designed to make the US the crypto capital of the world.
And just look at how fast it all happened. I mean, boom, January 2025, a new working group on digital assets. The very next month, February, the SEC starts dropping those huge lawsuits against firms like Coinbase and Kraken. March, in a move nobody saw coming, an executive order establishes the U.S. Strategic Bitcoin Reserve. And by July, the Genius Act becomes law, the first ever federal framework for stablecoins. In just a little over 6 months, the entire landscape just changed.
So when you stack all that up, right, the bull case seems like a slam dunk. You've got political will from the very top, regulatory roadblocks just disappearing, the government itself basically becoming a hodler, and actual legislation providing clarity. It was the perfect setup for a truly historic crypto rally.
But here's the part that is so confusing. The market just shrugged. It's like all that political momentum ran into a brick wall of financial indifference. The numbers? Well, they paint a completely different picture.
First, let's look at the traditional market. The Dow Jones Industrial Average breaks 50,000 for the first time ever. Now, this isn't just some number, it's a massive, flashing sign of confidence in the US economy. Now, let's look at crypto. The Fear and Greed Index is sitting at an 8, just 8. That's not just fear, that's extreme fear. So while the stock market is popping champagne, the crypto market is basically hiding under the bed. And right here, you can see the great divergence in a single chart. You've got stocks soaring up to new highs, while the total crypto market cap is pretty much flatlining. All that incredible news for nothing. The price just isn't moving. So why? You know, this quote from Pinto News just nails the feeling perfectly. Participation without acceleration. It means people are active, right? The community is buzzing, there's all this energy, but none of it is translating into upward price movement. It's exactly like an engine revving really, really loudly, but the car is stuck in neutral. The answer isn't in the headlines. It's in the hidden system that actually drives where the money flows. This isn't about good news versus bad news. No, it's about two fundamentally different bets that the big money is making right now.
Okay, so first you have what's called the confidence trade. That's the stock market right now. It's a bet on stability, a bet on predictable policy, and a belief in the strength of the existing U.S. economic system. When the main story is America is strong, capital naturally flows into the assets that reflect that story.
And then there's the pro-risk asset. And this is how large-scale capital, the big players, still see crypto. Despite all those positive headlines, they see it as an asset class that's super sensitive to big economic shifts and uncertainty. And when things feel a little unsettled, the priority for those big investors isn't chasing massive gains. It's protecting the capital they already have.
And this is where it all clicks. Stocks are playing the confidence trade, right? They're driven by stability with a guiding story that the US economy is the safest bet out there. The goal is wealth preservation. Crypto, though, is playing a totally different game. It's a pro-risk asset driven by future potential, with a story about rebuilding the entire financial system. And the goal here is wealth generation. They're two completely different games being played on the exact same field.
And here it is. This is the hidden truth at the very heart of this paradox. All those pro-crypto policies, the ones that seem so positive, well, they're creating massive, rapid change to the financial system. And for the big, conservative money, the kind of money that actually moves markets, rapid change, even good change, equals risk. They're just sitting on the sidelines, waiting for all the dust to settle before they commit their trillions.
So what does all this mean for you? You know, sitting there looking your phone late at night. It means you have to get really clear on which system you're actually betting on.
So which one are you actually choosing? Is it A, the stability of the current system? Or is it B, the disruption of a future one? Be honest with yourself. Drop your answer in the comments below. There's no right or wrong answer here, but knowing which game you're playing, that's everything.
And let's be really clear about something. That feeling of confusion you started with, it's not some personal failure. It's a perfectly rational response to watching a market get caught between a really powerful political story and its own deep-seated financial structure. Understanding why the market is behaving this way is so much more powerful than just trying to guess what it's going to do next.
It all just boils down to this one question. When you invest, you're not just buying an asset, you are buying into a story. The real question is, which one are you choosing? The story of stable preservation or the story of volatile creation? Understanding this difference is exactly how you navigate these confusing markets without getting totally lost. If you want to keep digging into the systems behind the headlines, make sure you follow Fair Insight. It's the best way to avoid the mistakes that come from only listening to the narrative. This is Fair Insight. See you in the next video.